So first from our team, we have Stephen Samaya. He is a business advisor with the Connecticut Small Business Development Center, and he joined us last April as we increased our capacity to help small businesses navigate COVID-19 financing. He's been part of our CARES Act team that is focused on financing and issues around the COVID-19 programs such as PPP, EIDL, and other state grant programs. And as a member of the Connecticut Small Business Development Center operations team, Stephen takes a holistic approach to helping businesses start up and grow efficiently, effectively, and sustainably. He has more than 25 years of experience as a senior executive, management consultant, and successful entrepreneur. Stephen has extensive experience in strategy development, operations management, process and organizational design, business development, and leadership. Thanks for being here, Stephen. And then we're very happy to welcome Daryle Dudzinski. He is a long-standing and deeply respected Connecticut Department of Labor official who began his career in 1992 in the tax division. Since then, he's worked in multiple units and held among the most complex roles in the agency, including his current one as the Deputy Commissioner appointed by Governor Ned Lamont. Daryle has been on both sides of the house working with employers as well as with claimants, which is what makes him a great resource for us today. Currently, he's heading up major initiatives related to the pandemic, as well as work to modernize the department's 40-year-old computer systems. And I'd just like to thank the Department of Labor for taking the time to join us this morning to partner on this webinar. We know that the clients that we've been serving over the last year have had many questions, and we also know how busy your department is. And so we really appreciate you taking the time to directly connect with small businesses this morning. And just how busy has the Department of Labor been? Since March 13th of 2020, the agency has received more than 1.3 million unemployment applications, about 10 years of applications in 10 months. The agency has dispersed nearly $7 billion in benefits in that same time period. In July, the Connecticut Department of Labor launched the Consumer Contact Center to answer unemployment questions and assist filers. And in just 6 months, the nearly 100 agents at the contact center have fielded more than 700,000 phone calls. Wow, it's very impressive numbers, and it just shows how busy the Department of Labor has been working for our residents. So Daryle, thank you very much for being here, and I'd like to turn it over to you to start.
Thank you, Matt, and thanks for bringing us together today. I know people have a lot of questions for the agency, and I'm glad to have a chance to talk to everyone. Of all the losses from the pandemic that our agency feels acutely is the loss of direct contact with our customers. We used to be out in the community and available without much delay for residents and businesses. That's changed, but we are working hard to get information out, so I urge you to sign up for info to your inbox on our website homepage. We'll send you press releases and updates directly. You can also follow us on social media for updates, and that information is also on our homepage. I'm going to try to get through a lot of information in 15 or so minutes, but if you miss anything, I want to alert you to the federal programs page linked from our homepage. We also have information on shared work, with contact information for that program. Let me begin with shared work, as it is a great resource that we think is underused. The Department of Labor Shared Work Program has been around for more than 20 years. It allows companies experiencing downturns to reduce employee hours between 10 and 60% and supplement the lost wages with partial unemployment benefits. Essentially, the program ensures that business and industry can hold on to their trained and skilled labor force even when work is slow. They can cut hours and reduce expenses. Then when the economy recovers and business returns, they bring their employees back full-time. No recruitment, hiring, or training costs. Over the past 10 months, the program has experienced major growth, going from 288 companies to nearly 1,400. About 32,000 employees in the state are served by the program. Shared work is a win-win-win for companies, workers, and the economy. And the federal government has recognized that. The U.S. Department of Labor announced that companies would not be charged for unemployment paid to their employees who participate in the shared work program, a benefit that was extended in CARES Act 2 and provides an incentive to avoid layoffs and keep workers job attached. So what if you can't avoid layoffs? What programs are available to help? Unemployment benefits are notoriously complicated. Essentially, this is because each claim is attached to an individual work history, salary, verification process, etc. There isn't a one-size-fits-all here, which is why we tend not to give specific claims advice without having all of the information. It's very important to know where to go for information and help. A hint here, it's not Facebook. It's the Department of Labor's website at www.filectui.com, www.filectui.com. Our site has fact sheets and frequently asked questions and is the best resource for accurate information about eligibility, timelines, and next steps for applicants. Beyond the state unemployment program, the federal government, in response to the pandemic, has established a handful of new programs as well. They've also extended regular programs and even put in place funding for gig workers and others where eligibility never existed before. Most of these programs are set to expire this spring and will require congressional action for extension. Our website keeps people posted on this information too. The federal programs are designed to meet different needs, so they have different requirements for participation. I'm going to cover some basics here. State unemployment is relatively straightforward, 26-week benefit year for those with W-2 employment. Pandemic Unemployment Assistance, or PUA, is the program most often associated with the self-employed and gig workers, most commonly people with self-employed wages or who don't get a W-2. This is a departure from unemployment agencies, as these workers have not previously been eligible for unemployment assistance. CARES Act 2 extended this program for a total of 50 weeks. It is currently scheduled to end April 10th, 2021. There are several extension programs, extended benefits, or EB, the Pandemic Emergency Unemployment Compensation, or PEUC. Depending on the situation, a claimant would be eligible for these after their regular state unemployment benefits expire. These have different eligibility requirements and timeframes, but between the two of them, they can bring a claimant up to 52 weeks of benefits, possibly more with the PEUC program. The government has also cycled through a few supplemental programs as well. These have essentially added funding to regular benefit payments, no matter which program you use. The current iteration of this supplement is the Federal Pandemic Unemployment Compensation, or FPUC, which provides an additional $300 per week benefit for all claimants, regardless of which unemployment program they use. This program is in place now and ends on March 13th, 2021. Claimants do not need to apply. Supplements are automatically attached to these benefits. So all of these are explained in detail on our website, CARES Act 2 page. There is one more federal program that we anticipate to have up and running by early March, and that is the Mixed Earner Unemployment Compensation, or MEUC. The Mixed Earner Unemployment Compensation Program is for residents who have both self-employment earnings as well as W-2 earnings. Here's what we know so far. Eligible claimants will receive an additional $100 per week until the program expires on March 13th, 2021. Eligibility requirements include at least $5,000 in self-employment net earnings in the most recent completed taxable year. So for filers for 2020, will submit their 2019 tax documents. PUA claimants are not eligible for this program under the law. CTDOL expects to open the application process in late February, early March. Eligibility will be retroactive to December 27th, 2020. CTDOL will notify claimants who may be eligible to apply. The program is 100% federally funded. Employers are not liable for MEUC payments. Mixed earner unemployment compensation, like all unemployment benefits, is taxable and could impact Medicaid and CHIP eligibility. It's important to point out here that all of this is underpinned by the CARES Act too. So as we progress through this spring, we expect to get updates and information about extensions of programs authorized by Congress and the new administration. We'll keep our website updated, so that is always a good place to check in. Matt, this might be a good place to stop and let Stephen get a word in on PPP.
Great, thank you, Daryle. And just so everybody knows, when we send our follow-up email following the webinar, we will have some of these direct links in there for you as well, so you can get to the spaces that, or the web pages, I should say, that Daryle mentioned. So Stephen, I'll turn it over to you to talk a little bit about the PPP program.
Thank you very much, Matt, for the introduction, and thank you, Daryle, for the great information. With so many moving pieces, it's important both for employers and for self-employed individuals to understand all the resources that they can access. Again, my name is Stephen Saman. I'm a business advisor with the Connecticut Small Business Development Center, also known as the Connecticut SBDC. In case you're new to the SBDC, we've been hard at work during the pandemic, providing numerous webinars and assisting hundreds of businesses in accessing COVID-19 funds, and also helping them rethink how to do business during these challenging times. We know how difficult things have been for all our small businesses, and we're here to support you. Today, our conversation will address the Paycheck Protection Program and the information mainly centered around unemployment and other aspects of employee and wage-related programs and how they interact with the PPP. This is not designed to be a webinar on PPP that helps you understand how to apply. If you would like information on how to apply, I encourage you to check the training section of our website, which is CTSBDC.com, where we have some recorded webinars that go into great detail on the PPP application and on forgiveness. Of course, you're also always welcome to reach out to get one-on-one help from a Connecticut SBDC advisor. We get asked about whether we provide these slides that we use in our webinars all the time, and the answer is that we do not. But as I mentioned, we do post the webinars on the Connecticut SBDC website. And we'll record this webinar. We are recording this webinar, and as with the others, within a couple of days, it'll be posted as well. So if you need to review any of the points that I go over on your own timing, you're going to be able to do that in just a couple of days. Please welcome, as mentioned, you can use the Q&A box at the bottom for your questions. And on the next slide, I'm going to start by discussing the eligibility for the PPP program. I'm sure everyone's heard about PPP, which was originally set up in March of 2020 and has since undergone many changes and updates, with the most recent updates coming from the Economic Aid Act, which was signed into law in December. The latest version of the Paycheck Protection Program allows for eligible individuals, businesses, and organizations to apply for the first time if they've never applied before, and also for a second round of funding if they did apply previously. The main reason we're covering some detail here is because we're talking about resources from the Department of Labor, and some of these intersect with PPP. Now on screen, you can see that we're covering the basics of the eligibility of who is eligible for PPP. And this includes independent contractors, sole proprietors, and single member LLCs with no employees who are considered self-employed. These self-employed individuals, as you heard from Daryle with the Department of Labor, are eligible to also apply for the Pandemic Unemployment Assistance, or PUA. So it's important to understand how these two interact. As an employer, you'd also want to understand how shared work or your employees collecting unemployment interacts with PPP. So let's cover eligibility briefly in case clarity is needed here. For first-time applicants, which is also called first draw, as I was mentioning, if you didn't apply for PPP funds before, you can do so now under this act. You can also apply for the maximum funds that were available to you if you previously did apply and receive a PPP, but you returned some of those funds. So this is a separate point. One, you can apply for the first time if you never have before. And two, if you did apply, receive funds, and for whatever reason, return some of those funds, repaid them, you can go back and you can request the balance of those up to your original maximum amount of the first PPP. This doesn't mean that that if you feel that there was an error made and you didn't get as much as you thought you should have, or if you made an error in applying and you didn't include owner's compensation and you only included payroll, that you can go back for your first draw and increase the amount, just that you can get up to the amount that was initially approved. Now, if you look at this, if you've looked at this information before, the criteria for applying for a first-time PPP is still very similar to what it was before. Those who can apply include small businesses, self-employed individuals, sole proprietors, independent contractors, small agricultural cooperatives, and also nonprofits, including churches with 500 employees or fewer. The Act expanded eligibility for some 501c6 organizations as well, with as long as they have fewer than 300 employees and don't receive more than 15%, that was 15% of their revenue from lobbying activities. In addition, local newspaper, TV, and radio stations, which may previously have been ineligible due to affiliation rules with other stations, can also apply as long as they have 500 employees or fewer. I want to emphasize this next point because many did not apply the first time around thinking they were not eligible. If you're self-employed, and this means that you're an independent contractor, a sole proprietor, the owner of a single member LLC or an LLC partnership, you qualify for the program even if you don't have any employees. Many times you may have read, and I'll even refer to payroll as being the basis for the calculation. And that's why a lot of people thought that they may not have been included because they didn't have quote unquote payroll. But in fact, all those in the categories that I just mentioned are eligible. Now, if you have employees, you can use your owner compensation replacement wages as well as your employees' compensation. So both can be used to calculate the amount of your PPP loan. It's important to note that businesses that were not in operation on February 15th, 2020 are ineligible for PPP. This is as it was before, but now there is an exception. If you bought a business that did not apply for a PPP previously, and that business was in operation on February 15th, 2020, you might qualify if you retained the operation as it was. So that would likely mean that you retained the employees, the benefits, vacation days that may have accrued, and most other aspects of the business on the day that you took over the operation, just as it was on the day before you took over the operation. Doesn't mean you couldn't have had a brief closure, but to turn over to the new ownership. But it does mean that you had to really substantially keep everything identical to the way it was operating previously. We're still awaiting SBA guidelines as to whether this would also apply for a second draw PPP. So the same situation, but where the previous owner applied for a first draw, we do not yet know whether the business would qualify for a second draw. And we're waiting for SBA guidance on that. Now I'll talk a little bit more about that second draw. or the second time applying for PPP. A question we often hear is, if I applied for PPP before, can I apply again? Well, the short answer is yes, as long as you meet the requirements on the screen. Some people, businesses, and organizations that were eligible for first round are also eligible for a second round, but the cap on the number of employees has changed to 300 or fewer from 500 or fewer for most business categories. To qualify, you also need to qualify for the second draw, that is, you also need to demonstrate a reduction of at least 25% in gross revenue between comparable quarters from 2019 to 2020. So any one quarter, and it would be the same quarter, Q1 to Q1, et cetera, from 2019 to 2020, that is a requirement to qualify for a second PPP. And another requirement is that you must have used up all funds that you received from your first draw PPP before applying for additional funds. Now, this may or may not apply to you, but many small business owners didn't fully use their PPP funds or held on to them in an account uncertain of how to use them because they were worried that they would use them incorrectly and therefore not get forgiven or some other way get themselves into trouble. Please reach out for guidance if you're unsure what you can use the funds for. And we'll cover some of it here, but we're always here to help. If you do not spend the funds within the maximum number of 24 weeks, which is your covered period, from the moment you received it from the bank, you'll have to pay them back as a loan. So please don't just let the money sit in an account. Don't forget that you're saying by applying, just by applying for the PPP, you're saying that you need the money. And if you're holding on to it, not spending it, it makes it look like you really, potentially did not need that loan. If you'd like information on how to apply, how to calculate how much you apply for, and how to make sure you use the funds correctly once you receive them to maximize the forgiveness, I want to encourage you to review our previously recorded webinars, as we mentioned, and also reach out to an advisor who, we can help you with all aspects of the PPP in the situation. As we move on to the next slide, I'll address some commonly asked questions regarding eligibility. Can I apply for both PPP and unemployment? Well, if you're a self-employed sole proprietor or the owner of a single member LLC, you potentially qualify for both pandemic unemployment assistance and PPP. However, you cannot use the PPP loan to cover your own compensation as an owner while at the same time receiving unemployment benefits. If you're receiving unemployment benefits, you can use your PPP loan for other business expenses during the same time period, such as employees' compensation, if you have employees, rent, mortgage interest, that is, on a business property, utilities, covered operating costs, covered property damage costs, and covered supplier costs. However, if you do not have employees, we recommend that you use your PPP as owner compensation replacement, as it's the easiest way to both track and report how you used your loan. In this case, you would report to the Department of Labor on a weekly basis the funds that you received from the PPP, and you would not qualify for unemployment during this period. So in this case, the next question is going to be important to you as well. What can I do to manage both PUA and PPP well? Well, let's start off by talking about timing. Right now, the timetable for applying for PUA expires on March 13th in Connecticut. And the deadline to apply for the Paycheck Protection Program is March 31st. This means that if you're already receiving PUA, you can continue to receive those until March 13th and apply for PPP before the deadline on March 31st to get 10 weeks of your net income as compensation. That's the calculation. It works out to 2.5 months of your annual compensation. If you are receiving PPP, you have to report this as income. That's if you're receiving PPP and you are already receiving PUA as well, then you have to report that your PPP wages that you're taking as income when you file on a weekly basis. If you have employees and are getting PPP, you can use the PPP to cover their wages and other eligible expenses, but you would not be able to use the PPP to cover your own wages if you're getting unemployment. Alternatively, you would report your wages to unemployment when you file weekly, and that would either reduce or pause the unemployment benefits. And you would use their PPP to cover your wages as wage replacement for that same period. Now, for those of you with employees, what if an employee quits, or if you have to fire someone for cause during the covered period of the PPP loan? Let's start with making sure that we're on the same page regarding covered period. For PPP, the covered period starts the day you receive the funds from the lender, and it ends any time between 8 and 24 weeks thereafter. You can choose the length of your covered period, and it can be any time between 8 and 24, however it best suits your needs and how you need to spend the funds. Another important point is that, as you probably know, the PPP loan is forgivable as long as you follow the guidelines of how to use the funds and a few other points. One of those is requires that you retain the same number of FTEs, or full-time equivalents. I'll discuss this briefly in a few minutes, and it's important to know that there are specific guidelines on how to calculate FTEs that must be followed. So you may already, calculate FTEs in a particular fashion, but there's a very specific way that the SBA has laid out, and I'll go over that in a moment. For PPP loans under $50,000, though, there is no longer a requirement to maintain FTEs and wages. However, PPP loans above $50,000, for anyone who's receiving a PPP above $50,000, you still must keep your employees or your full-time equivalent count where it was, and you must maintain wages at least 75% of what they were previously on an annual salary or hourly wage basis. That is to get full forgiveness. But you still have to make sure that under all circumstances, you only spend the money on what's allowed. And also that you keep good records on documenting someone quitting or being fired. Because when it comes to PPP, as long as you've documented this properly, you won't have to count that employee as a reduction in your FTE count. Of course, independently of PPP, an employee who gets fired may be entitled to regular unemployment compensation, as you, I'm sure, already know. Here's another employer question. When things are slow, I laid off employees. I'm getting PPP, and I offered to rehire the same employees, but the employee declined the offer. Will this cause me trouble when I request forgiveness of my PPP loan? Well, no, it won't. Not as long as you follow this process. If you offer to rehire the employee for the same salary or wages for the same number of hours, and that employee refuses to return, then you will not be penalized. But to qualify for this exception, you have to have that offer that you make in writing. So we recommend that whether it's a paper letter or whether it's an email, that you keep a record of that. Employees and employers should be aware that employees who reject an offer for reemployment may also forfeit eligibility for continued unemployment compensation. Okay, let's move on to the next slide now. When you're looking for solutions, sometimes combining the different programs can feel like trying to assemble a complicated puzzle. Can you combine PPP and shared work, for instance? You can, but under most circumstances, if your loan is over $50,000, it will result in your not receiving 100% forgiveness, and you'll need to make a partial repayment of your PPP. I'll explain why in a minute, but keep in mind that that's a business decision to make, and it may work out better for you to use the shared work program and to receive PPP, and to realize that any portion that you repay is going to be repaid over 5 years at 1% interest. So when you look at this, look at it as a business decision, not as an absolute necessity that you do everything you can, even if it's not in your business's best interest, just to get 100% forgiveness. Because as a loan, it's still extremely advantageous terms. So here's why, though, you might not get full forgiveness. Under PPP, you have the FTEs, as I described, FTE requirement, and you're expected to retain your FTE count. Now, for the purposes of the PPP, one FTE equals 40 hours. It doesn't matter whether your general practice is to maintain a 40-hour week, a 35-hour week, a 38-hour week. 40 hours is the SBA's definition that we have to go by for PPP for one FTE. Now, to calculate a partial FTE for anyone who works under 40 hours, you use one of two methods. You can either use a quotient, which is the proportion of hours, And that means dividing the actual hours they work per week by 40. So as it shows on the screen, if someone worked for 30 hours, that's 3/4 or 0.75 FTEs. The alternative is that anyone who works under 40 hours at all, whether that's 39 hours or whether that's 5 hours or 15 hours, you can count them all as 0.5 FTEs. That is clearly a simpler way to do the calculation, but we recommend that you go through the calculation both ways to determine what works best for your business. Because shared work is done across a group of eligible workers, the end result is likely to be a reduction in your FTE, the hours that they work for you. So this would reduce your forgiveness by the FTE reduction. For example, if an employee normally works 40 hours a week at $20 an hour, and you use shared work to reduce his hours by half to 20 hours a week, then that employee would get the benefit of half his pay plus the supplemental shared work payment, which is great in the sense that he would receive more than if you just cut his hours in half, and more than if you'd had to lay him off and he would only collect unemployment, as you can see on the screen. However, this also means that that employee goes from being 1 FTE to being 0.5 FTEs for you. So when it comes time for forgiveness and you can add your FTE reductions, you would have to pay back the corresponding percentage. So it might be best to use your PPP funds for 8 weeks to fully compensate your employees during a PPP loan minimum covered period. That's what I mentioned, the minimum covered period is 8 weeks. So you could potentially use up your PPP funds during those 8 weeks, and then perhaps start working through the shared work program if you're unable to keep them at the same level at that point. And Daryle may be in a better position to speak to the logistics of starting and stopping shared work, but if you haven't already started it, then it seems that potentially using your PPP up first and then going to shared work may be a good option. And again, our advisors, as every situation is unique and can get complex, they're happy to work through you with that. Now, on the next slide, we'll discuss another important piece of information that we've been hearing questions about: the Employee Retention Tax Credit and how it works with the PPP. What is it, first of all? The ERTC is a fully refundable payroll tax credit designed to encourage businesses to retain and compensate employees during periods in which the businesses are not fully operational. So who's eligible for the ERTC? To claim the in any given calendar must meet one of the following criteria during that quarter. Their operations were either fully or partially suspended as a result of an order from the government, from a governmental authority, or they experienced a significant decline in gross receipts during the calendar quarter in 2020 or 2021 versus 2019. Can you claim the ERTC if you receive a PPP loan? Yes. One of the more favorable provisions in the law allows for taxpayers to both receive PPP loans and to claim for the ERTC. This overlap was not permitted when the CARES Act was first enacted, and businesses in need of cash infusion during 2020 more frequently turned to the PPP loans as a source of funding rather than the ERTC. However, it's important that the new law makes the ability to claim ERTC and PPP loans retroactive all the way back to March 12th, 2020. As a result, businesses that received PPP loans in 2020 or will receive them now in 2021, you can still explore the potential ERTC credits for both 2020 and 2021. It's important to note also, though, that you cannot use PPP and ERTC for the same wages, only for those that do not overlap. So again, timing, as I've been discussing, is important to pay attention to that and how you use the PPP funds and when. Now, there's a lot of information to assimilate, and by attending one or even several of our webinars, you won't be able to likely remember all of it. But again, we have recorded the webinars and you can view them at your own pace, and we have advisors who can help you free of charge every step of the way. On the next slide, I'll describe some ways that the Connecticut SBDC helps. As I mentioned initially, We work with small businesses to provide no-cost confidential advising, utilizing our team of advisors and a network across the state. We have over 20 advisors in all parts of the state who work with businesses in every industry and in every situation, every step of their life cycle. We work closely with our resource partners as well, including local economic development officers and chambers of commerce to support our clients too. We work with businesses that are at the start, growth, or exit stage, and we pair the expertise of our advisors with a unique set of powerful tools that the SBDC has access to, including market research, financial analysis, and in-depth projections, decision-making frameworks, all of which would be difficult or expensive for a small business to access on their own. A few of the statistics just to demonstrate how broadly we've been able to help clients. In 2020 alone, we worked with over 4,600 clients. We helped them to access over $110 million of capital, and we either helped them to create or retain over 32,000 jobs. And even during the pandemic in 2020, we helped 151 new businesses launch. We've developed and continue to update our COVID-19 Business Resource Center on our website, which is, as we've mentioned, at ctsbdc.com, easy to remember. And we keep updating that with the latest information on federal, state, and other resources available during this time. On this page are resources that include state and federal guidelines, additional potential funding opportunities. We even have posters and infographics for you to reference, print, and share on various topics. Feel free to reach out for assistance to discuss the options for your business, and we can help you with pivoting, connecting better with your customers, again, accessing capital, and working through any and all of the applications that we've been discussing. On the next slide, it does list our website again, and you can also sign up to receive our newsletter on that website. You can also follow us on Facebook, Twitter, and Instagram so that you can be aware of anything that we're posting about any updates as soon as they happen. And finally, I want to thank you for joining us today, and we'll start answering your questions in just a moment. I want to thank you for your patience and understanding if we don't get to all questions, but we'll do our best. And if you do have additional questions, please don't hesitate to email them to us at ctsbdc@uconn.edu. And again, check the training section of our website for additional upcoming webinars, as well as the webinar recordings I mentioned. And now I think Matt's going to start to tell us a little bit about what questions are on your mind.
Yes, thank you very much, Stephen and Daryle. So Daryle, the first one's for you. What is the best way for somebody to reach out to the Department of Labor to speak with somebody about their specific situation?
So thank you, Matt. Through our website, you would want to get information about your specific scenario. And if that doesn't answer and you need the assistance of our contact center, you can go through the website and get that information. To reach out to the contact center, or have the virtual meeting with them, and you can potentially schedule an appointment.
Great, thank you. Another question is on shared work. We have a couple, and I'll try to sort them together here. What's the best way for them to find out about using the shared work program? Is all the information on the website, or should they talk to somebody specifically?
A lot of our information is on the website, most of it, but when you get into specific case-by-case employer or its employees just you do want to reach out, and we have a dedicated shared work contact information there. I just want to go back to one of Stephen's slide about the example of the monies, and when he referenced an employer being in a shared work program, and it had the $400 of gross salary for the 20 hours of work plus the $200 in the shared work unemployment payment. Right now, we're in a period of that FPUC, so there's an additional $300 that go to the employees on top of that $600 total. So it's actually $900 at this point.
Great,
really,
thank you.
Really big distinction, and again, no liability, no charge to the employer.
Great, thank you for that. And then
Welcome.
another question is, do the employees that are on shared work need to apply for PEUC to extend the benefit?
Yes, the federal programs require an application process. So if you're coming off of your 26-week state unemployment insurance eligibility period, you're exhausting the state benefits, you would then apply for the Pandemic Emergency Unemployment Compensation, or PEUC. And on our website, we commonly refer to that through our green button and into the Connecticut Tax and Benefit System, or CTABS, and under the claimant's account, they will be able to select apply for the PEUC application.
Great, thank you, Daryle. And then we have some PPP questions. So Stephen, I'll let Daryle get a sip of water. On the PPP side, a business that had a PPP loan in the early summer for a closed food truck has a rental property that has also been affected by the pandemic and has had issues regarding for applying for PPP. It continues to get rejected. What would you recommend?
There may be two different points here. One, it sounds like these are two different businesses, two different legal entities, the food truck that's now closed and the business that's with the rental property. So you have to make sure that you would be applying for a first draw PPP if it's a separate business, not for a second draw on the same business if it's a different legal entity. The other point is, I believe real estate rental businesses may not be eligible. That would be best on an individual basis to see how what your legal structure is for this business, potentially to touch base with us and work with an advisor one-on-one to further explore that. But that's my understanding is property rental is not eligible for PPP.
Great, thanks. And we have a question that they've received the first PPP and spent it, but they haven't filed forgiveness for it as of yet. Can they still apply? And I assume that's still apply for draw 2. And yes, you can apply if you have not applied or received forgiveness for the first PPP yet.
Yeah, and just to remind folks who may have taken out that first PPP loan is that you have 10 months from the end of your covered period, which for your first draw, if you already had that previously, was either 8 weeks or 24 weeks. It was binary then. It wasn't, any amount between 8 and 24. So you would take a look at the date the money was deposited in your account, go out either 8 or 24 weeks as you used for your covered period, and then look 10 months past that. That is the deadline for you to have applied for forgiveness. If you forget about this, it will automatically convert to a loan. The full amount will automatically convert to a loan with no forgiveness. So if you haven't applied yet, that's absolutely fine. They're considered two different loans. You don't have to, as Matt said, you don't have to apply for forgiveness for the first draw before applying for the second. But I would highly recommend you put on your calendar a big reminder that's going to be flashing at some date in the future that gives you plenty of time to get your forgiveness application in.
Great, thank you very much, Stephen. And if I could just get a clarification from the person that asked a question about a new program available to MBE companies, if you're referring to CTSBDC or to the Department of Labor on that question, it'll just help us answer that better. Stephen, we have some variations of questions on PPP. So I'm going to try to combine these together, but if you have somebody that is using PPP funds, they're trying to wait until after March 14th to start using it. And so the question is, and we have the other variation is they've received PPP, seems like draw 2. What are they supposed to do now in terms of reporting if they're not going to use it until after PUA expires?
Okay. Well, we'll talk about the two slightly separately. So for the first point that you brought up, someone that's waiting, I would say you can start the application process. It's going to take a few days to a week or two or longer. It could take a couple of weeks for you to receive the funds. So given that, the PUA may be running out mid-March, you could start in the beginning of March. It's a pretty low likelihood that, if you start, 10 days, 7 to 10 days before that, you're going to have any problem with overlap on that. In the second instance, If you already have received your PPP, again, you can use it for some other expenses potentially until you're past your PUA period, and then start to take it as income. But again, you'll be extending out your covered period. Just map that out and make sure as you look at the calendar that you can get out, at 24 weeks, you'd still be able to have a minimum of an 8-week period to use the funds. I say that because it's not explicit in the SBA guidance that you must use it a minimum of 8 weeks. I get this question a lot with independent contractors, which is, can I just take it in one lump sum, be done with it, take my PPP in 1 week so that I can collect PUA? The answer to that is we don't advise that at all. The SBA has increased audit abilities now with the new act, and because the range that we've been given is 8 to 24 weeks, it is implied that you should use a minimum of 8 weeks, not less, to draw down on that, even if it's just as owner compensation replacement.
Great, thank you. We have a question. Is a salon owner, can I apply for a PPP loan if I applied for the SBA loan? And so I'm going to assume there that the SBA loan is the EIDL, the Economic Injury Disaster Loan that the SBA has. The PPP is a different program than the EIDL. So yes, a business can take advantage of both. The EIDL is a loan, and that needs to be paid back. The PPP begins as a loan, and if you use it for all of the eligible and allowable uses, it can convert to a grant and you would not have to repay it. Or if you use some of it incorrectly, you may have to repay a portion of it. Do I have to report my PPP funds to PUA if I'm waiting to use them?
You're welcome to jump in there.
Or Daryle, either.
Yes. Sure. So if someone is certifying or applying for PUA weekly benefits, they are required to report their earnings. So if they have earnings, they would report that when they certify their weekly claim, again, on the PUA program. And that system accepts wages, earnings, and if what we would do is take 2/3 of those earnings and determine if there's a payable amount after that subtraction. If not, then they would not be paid that week. If there's a partial unemployment PUA payment, then it would be made to them.
Great, thank you, Daryle. Daryle, can I ask you, are there common issues, frequently made mistakes that businesses are making right now as they're trying to navigate that, any best practices that you would recommend?
For specifically for the shared work program or in general? Sorry.
I guess in general, for any of the programs in specific, but if there's things that would, kind of reduce the stress and the error and, reconciling issues is always, a big time suck for businesses and for the state. So
the best thing is always from the start, and it is by law, the employers are required to provide a separation notice to the employees. We commonly refer to that as a separation packet. Years ago, we referred to it as a pink slip. And on our website, we have this separation packet. It's information the employer would provide to their employee upon separation. And within the packet of information, which is really geared towards the employee to learn and have options available to them, is another in there is form section F as in Frank, and that is to be completed by the employer. And it really provides the information the employee needs when filing and filing accurately. If the employer has a specific return to work date, or there's a separation reason that is needed for the unemployment application process, the employer's registration number, and so forth. There's a lot of detailed information in that one pager that the employer would complete, but that would really help both the employer and the employee when it comes time to file for that unemployment claim.
Great, thank you. That's good to hear. We have a follow-up to the last question, which was on reporting the PPP funds to PUA and asking how much they report each week, or if they report it all as a lump sum. And my understanding would be that, so PPP is supposed to cover, so many weeks. So you would divide that out to be the portion that you'd be receiving on a weekly basis to line up with the weekly reporting on the unemployment side.
Yeah, and again, the best practice is probably to divide again, this is for as an individual, self-employed individual, or sole proprietor, that you would divide that probably by 8. You don't have, unless you have a reason that you want to stretch it longer than 8, but you would divide the total amount by 8, and that would be the amount that you would report when you file on a weekly basis for PUA.
Great. Thank you. Daryle, this is a really good one for you. So if somebody is getting extended unemployment benefits and they just received a $5,000 one of the state of Connecticut DECD CARES grants, do they have to record that money on their unemployment claim? It's a grant.
So if the grant pertains to wages in which the employee is receiving for that particular week that they're filing, they would have to report it as wages or earnings. It depends on what the grant's being used for and the purpose and what is being applied to the employee. And if as they file to certify their weekly claim, if it is earnings, reportable earnings, they do have to report that.
Great. And, I think, Stephen, you would add to this as well. This is something that, would be very specific for somebody to go through with an advisor to kind of navigate that.
Yeah, absolutely. Because one point is, it's not just like the PPP. It's not that you received the grant and you have to report that for PUA. It is, what did you use it for, as Daryle said? Because you may be using that, 100% for compensation replacement, but you also have the flexibility, as it's stated in the, in the terms of the grant, to use it for several other expenses as well. So you may want to try to optimize the use of that so that you can, collect as much of the unemployment benefit that you're entitled to and not reduce it by more than you need to.
Great. That was a great question. Thank you for asking it. And for the person asking about how to apply for the PPP, please reach out to us following the webinar and we can connect you with an advisor that can walk through that process. We also have a webinar that is available on demand on our website that walks through the application process, what documents you'll need to have and what calculations to make that as expedited as possible.
Yeah, and as you're looking at our website, if we have multiple webinars posted, it would have been the one February 9th was specifically tailored for self-employed individuals, sole proprietors, solopreneurs. So it goes into a little bit more detail versus some of the others.
Great. And so it looks like we've gotten through all of the questions this morning. Daryle, any closing thoughts?
Well, thank you very much for having the Department of Labor to present here. I think the takeaway is if any questions or gray areas that someone's looking into, is go to our website. We have so much information there, not only on the state but the federal programs that we administer. We are updating it all the time. Get the alerts from us and go to that as the source. We have our contact center, and you can, right now we're working through thousands and thousands of calls as you read from the beginning. So we appreciate the patience with our customers. We'll get to every single one of them. We're very passionate about our work, and we do care about all of our claimants and employers. So thank you for having me and giving me this opportunity to speak.
You're welcome. Thank you. We see how busy you are at the Department of Labor right now. And thank you to everybody that's working over there so hard to help support business owners and individuals during these very difficult, I was going to say months, but it's been about a year now. So thank you for taking the time this morning, Daryle. Stephen, thank you very much. And we hope everybody has a good day. Goodbye.
You as well. Thank you.
Bye-bye.